Do you know the two most important clauses in any retail commercial lease? If not, you could be leaving money on the table or missing out on major opportunities to grow your business. If you run a retail business, negotiating your commercial lease is critical. And within that lease, two clauses could make or break your success: the use and exclusive rights clauses. I will explain precisely what these are so you can use them. What is a use clause? A use clause states exactly what type of business you can operate in a retail space. It defines and limits what you can do. For example, your use may be restricted to a restaurant, clothing store, or office. This protects you by ensuring the space matches your plans. But it also helps the landlord avoid incompatible businesses on their property. The key is getting the details right. A vague retail store use doesn't say much. However, the clothing and accessories store is very specific. What are exclusive rights? Exclusive rights keep the landlord from renting to your direct competitors in the same property or complex. For example, if you run a coffee shop, you may negotiate exclusive rights against other coffee shops nearby. For you as the tenant, this is huge. It eliminates competition at that location, so you can maximize profits without worrying about rivals next door. But for the landlord, exclusives limit their options. They can't lease to as many prospective tenants. And if another tenant violates the exclusivity, the landlord faces major problems. So, how do you balance both sides when negotiating the lease? On the tenant side, consider things like exclusives for your primary goods only, size limits, like exclusivity under 5,000 square feet, percentage sales caps, like exclusivity if competing food sales exceed 20%. For landlords, look at carefully defining exclusives. Factor in property size and location. Evaluate tenant mix and demand. The bottom line: both tenant and landlord can benefit from the right use clause and exclusive rights. Landlords maintain flexibility while tenants get to control their business environment. The key is understanding these fully, negotiating strategically, and tapping expert legal help. This foundation sets up success for both parties and leads to sustainable, profitable commercial real estate relationships. Thanks for watching, and please remember to like, share, and subscribe.